Thank you very much for the opportunity to be here. I want to make some general introductory remarks. We will get to the details later, except on Brexit, of course. First of all, as Brian said, I'm not too sure, when the theme of this conference was decided, but whoever decided it was pretty prescient, I think. First they spotted Brexit, and then they spotted the more recent events, which I think have made this a particularly relevant moment to speak. Needless to say, these recent developments include a potential change in approach to regulation and indeed international cooperation in the United States. And such a change, I think, would substantially impact the nature and content of multilateral cooperation going forward. By extension, it would also change what I will be saying here today. Unfortunately, the timing of the conference is not exactly ideal. The direction of travel, I think, in the US is reasonably clear when we now have the executive order on Dodd-Frank, we have the letter from Congressman McHenry, but the exact implications of these for US financial regulation and international cooperation are not so clear. So what I'm not going to do today is I'm not going to speculate about the implications of these developments for our cooperation. All I will say is that we are happy with the current arrangements, and we hope that they stay largely intact. Instead, what I want to do is focus on what we have learned from our experience of current arrangements for cross-border regulation and how we can build on that experience. And in this context, I will briefly discuss three aspects of our work. First, the merits but also the limitations of multilateral cooperation in setting standards. Second, the need to supplement multilateral cooperation with sound frameworks for bilateral cooperation. And then lastly, I will just briefly talk about the specific tools that we have to deal with regulation of cross-border financial activities. And Brian has mentioned it's primarily equivalence. First, on multilateral cooperation. I mean, the Commission by its nature is committed to multilateral cooperation in financial regulation. I mean, given our role in the EU, it is somehow in our DNA. I mean, this is what we do for a living. And that commitment, I think, was only reinforced by our experience of the global financial crisis. I mean, that crisis revealed in very stark terms the degree of interconnectedness in the global financial system. It showed how localized failures in regulation can have devastating and dramatic systemic effects. This view, I think, was also shared by our international partners, and it explains why I think multilateral cooperation in financial regulation in particular, via a reinforced Financial Stability Board and a Basel Committee, was the key driver, I think, in the emergence of the G20 after the crisis. I was there for that first meeting. We did the annex, which was 4 pages long on financial regulation. So it was the key axis along which the new world order, per se, came into being. And on balance, we believe that multilateral cooperation has worked pretty well. We think it has contributed massively to safer and sounder global financial system. There are the issues that Brian mentioned, but in general, we think it has been a very positive development. All that being said, the reality is that it's never easy to find two jurisdictions that fully converge in their concepts and in their approaches to regulation. And so all too often we end up with significant divergences across the main jurisdictions. I mean, if we're honest, even in the EU, where we share a single market, any agreements we have on convergence are the result of long, difficult, complex, sometimes too complex negotiations. So we should not, set the bar too high. And why is it so difficult to reach this convergence in cross-border regulation? Well, I think it's because any decision to regulate involves a number of steps and decisions where differences between jurisdictions can very easily emerge. I mean, first, the evidence of market failures, risks to stability and integrity, or concerns about investor protection, they all must be demonstrated before a legislator is ready to enact a proposal. So the quality of that evidence may well differ from one jurisdiction to another, leaving one more comfortable to act than another. Second, the analysis we do and the conclusions we draw by those making or proposing legislation are rarely the same, even among mature jurisdictions, let alone when we include emerging markets. So the interpretation of any evidence we have may differ as well. Third, the timing to act is very rarely of our own choosing. And typically there is no room to sort of sequence action with fellow regulators globally. So the opportunity to act may differ. And then last but not least, we have differences in legal frameworks, in mandates, in institutional considerations, and they can all have a major impact on how the regulatory solution is actually framed. So again, preferences in the design of regulation can emerge. So in all these axes, you have great scope for divergence. But despite all these divergences, I think the key jurisdictions have a clear interest in contributing actively to global standard setting and ensuring that multilateral cooperation works well and works as well as possible. Now, our current arrangements are not perfect, but we in the EU believe that they are highly functional. And as Brian has said, the EU has, we have had big achievements in the FSB and in Basel. So it's not as that we were always prize takers in these fora. But I would mention just one aspect of multilateral cooperation which could be improved from a specific EU perspective, and you'll not be surprised that I make this comment. Many of you will have seen the Sylvie Goulart report on the representation of Europe in these fora. Now, all of the fora have their own various government frameworks and arrangements, but the extent to which the EU is represented in them differs. Often there are only a few EU members in these fora, with the Commission essentially representing the rest as an observer. We are, by the way, quite an active observer, but we're still only an observer. And too often this split representation, as well as divided views among the EU member states who are actually participating, means that we punch well below our weight. So there would certainly be benefits from our perspective in reviewing first how the EU is represented in these fora, and as a minimum, just improving intra-EU coordination before we actually start speaking in these meetings. This could involve developing mechanisms for reaching common EU positions before we go in, using information exchange more actively, also using the ESAs, etc. So there are various ways that we could improve and make the EU work even more efficiently in these international fora. I think even with these improvements, however, there will always be limits to what you can achieve in a multilateral cooperation environment. As I said, there are just too many opportunities for difference. And we want global standards that protect financial stability and create a level playing field. But at the same time, those standards should have the right elements of flexibility to take into account the specificities of the local systems. So not surprisingly, therefore, striking that balance between convergence and flexibility and specificity is not a straightforward matter. So from our perspective, we often see the need to complement multilateral cooperation with more targeted bilateral cooperation. And there are kind of few ways in which we do this. First, we work with some of our key partners like Japan, for example, on a comprehensive and ambitious framework for regulatory cooperation embedded inside a trade agreement. We are reasonably optimistic that we can come up with a solid result that will reinforce our good bilateral cooperation with Japan. We have other bilateral dialogues which are at a lower level. We have a variety of shapes and shades in terms of structure, formality versus informality, scope, number of countries involved, for example. Then last year we upgraded our platform for regulatory discussion with the US, which we now call the Financial Service Regulatory Forum. We're also reaching out to Asian countries with a successful EU-Asia Forum in October last year, and we have a new version, a new edition planned for this year in Hong Kong. So we are also working hard to supplement what we are doing at the multilateral level with pretty important bilateral arrangements as well. As I've only 10 minutes, I will just quickly say a few words about the specific tools that we're using in terms of regulating cross-border finance in the context of implementing these international standards or bilateral standards that we agree. In the EU, as you know, we use an equivalence process. And as you know, there's a significant diversity in the way that we can run our equivalence processes. This is an art and not a science. Legislative frameworks vary significantly. Some involve the supervisory authorities, some don't. Some are specific, some aren't. The objectives of the equivalence assessment can also vary. In some cases, we are just looking at the exposure of EU firms. In others, we're looking at the presence of non-EU firms in the EU. And others, we're looking at cross-border aspects, typically in the case of markets. The nature of the equivalence assessment can vary, although there's always some form of legal dimension. And equivalence decisions can also vary in duration and scope. For instance, just part of a regulatory framework in a third country. They might include conditions, and when relevant, might also necessitate some sort of reciprocity. So as you can see, there's a sort of mixed bag of equivalence arrangements here, and we think there is probably scope for rationalization and improvements in coherence. We've already implemented certain improvements in how we approach this task internally in the Commission, and we're studying further opportunities to simplify and streamline our processes. Having said this, I again have to say there are limits to what we can achieve in the short term, because many of these processes are already embedded in legislative texts, so they're not so easily changed. But we will keep you up to date as we go along in this work, and we're quite ambitious in terms of the changes that we want to make. And just before concluding, I want to mention the idea of mutual recognition and mutual reliance. These are, in our view, very laudable goals. The EU, with our comprehensive system of equivalence, should be well placed to be a party to this type of arrangement. But again, beyond CCP deference, in the financial sector, there are not too many examples where this approach has succeeded. This either suggests that it's too difficult, or that we just haven't taken the opportunities that have arisen. We will have to see as we go forward, but we're certainly not opposed to these ideas and approaches. So maybe I will leave it there, and I look forward to going into a bit more detail in the discussion.